Stocks on Wall Street end the trading session higher. The S&P 500 rebounds, posts another record close with a push from Nvidia. Asian markets trade mixed. The GIFT Nifty is indicating a higher start for the Indian market. Crude oil prices edged lower as concerns of an oversupply outweighed political tensions in Russia and West Asia. Gold scales to a fresh record high as market braces for further rate cuts from the Fed. External Affairs Minister S. Jaishankar meets with the U.S. Secretary of State Marco Rubio. This is the first meeting since the tariff standoff, and the two leaders spoke on a range of bilateral and international issues of current concerns, including trade, energy, pharmaceuticals, and critical minerals. The United States should be India's best friend, says JP Morgan's Jamie Dimon, as that H-1B fee hike caught everyone off guard and bats for merit-based immigration. That's an exclusive. And in the primary market, Anand Rathi will launch a rupees 745 crore IPO today with a price band set at 393 to 414 rupees per share. Three more IPOs, Jaro Institute, Solar World Energy Solutions and Shesasai Tech, also open for subscription today. Hello, good morning. You've tuned into Power Breakfast, coming live from CNBC TV 18. I'm Vinny Motiwala in the Mumbai News Centre. Thank you so much for tuning in. As always, let's start by looking at what the Asian markets are doing this morning. Given the cues from the US weren't bad, Asian markets have opened up mixed. We're seeing Taiwan index that's managing to hold on to gains of 0.8 to 0.9%. But on the flip side, we have Hang Seng that's muted in today's trading session. ASX 200, very muted day of trade coming in here as well. And Shanghai is trading with cuts of 0.2 to 0.3% as well. So mixed signals that we're seeing right now coming from the Asian markets. Let's look at what the Nifty implied is indicating for the Indian markets. At one point of time, it was a slight bit of a positive start that we were watching out for. Right now, also very muted start is what we could keep an eye out on. Just a 12-point downtick right now is what the Nifty implied open is indicating. But that's how the Asian market opening is not what you're seeing coming in. Japan market is closed as of now. But how are all these cues that we're seeing coming in from the US market, Asia market opening? How is that going to be impacting our Indian market? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for in today's trading session. First up, let me go across to Vivek, who's here to set us up in terms of the market cues that we should be keeping an eye out on. Good morning, Vivek.
Well, good morning. What we're essentially working with today is a very good handover, especially coming from Wall Street. A steady green handover is what we looked at. All of the three indices as far as the US markets ended in the green. Now, along with that, oil prices yesterday ended largely flat with a slight negative bias. So Brent ended lower by 0.2% near the $66.5 a barrel mark. On the other hand, keep an eye out for gold prices and especially gold fin lenders. All of these companies yesterday saw a very strong session, and gold prices too yesterday hit a record high. So that will be one particular section of the market to keep an eye out for. Indian markets yesterday largely dragged lower by the H-1B visa issue. The Nifty IT index was along expected lines the weakest sectoral index. Nifty IT index fell over 3%, with mid-caps taking a larger knock compared to the large-cap IT names. So market breadth was in favor of the declines, and in fact, the broader end of the market actually managed to go ahead and snap a 11-session winning streak. Along with that, the other set of exporters, which was the pharma pack, they too ended lower. And like we mentioned, gold finance stocks, especially Muthoot Finance, ended 4% higher. Like you mentioned, Asian markets indicating very mixed set of cues. GIFT Nifty indicating a largely flat start with a slightly negative bias.
Thank you so much for that, Vivek. But let's go across to Gaurav now, who's here to tell us which are the important stocks to watch out for in today's trading session. Good morning, Gaurav.
Well, good morning. First, let's talk about some consumption stocks. Festive season has begun and we have already seen some kind of uptick in the consumption because Maruti Suzuki now, they have said that they have delivered close to 30,000 cars already on day one and they have received 80,000 inquiries for new vehicle. Hyundai Motors, they also said that they have delivered close to 11,000 cars on first day of Navratri. Remember, company said that this is the highest single day performance for the company. Other than that, let's also focus on JK Lakshmi Cement because two news updates. First is that they have commissioned additional grinding unit capacity at one of the facilities in Surat, and at the same time they also completed its debottlenecking of cement mills at Sirohi. So along with that, the total cement capacity has increased to around 18 MTPA. Some new real estate players. First, let's talk about Suraj Real Estate Developers. They have launched their new product in Dadar with gross development value of 250 crores, and Brigade Enterprises. Now, they have also launched their new product in Bengaluru with gross development value of around 1200 crores. So, definitely these two companies on our radar today. On the back of the order win, we have got Rail Vikas Nigam Limited. They have received an order worth 145 crores from Southern Railway, and KEC International. They have also received an order of 3,243. So these two companies are also on our radar. Alchem Labs, let's watch out for that because they have launched the new drug Pertusa injection. Now remember, this drug is used for the treatment of breast cancer. And lastly, let's also focus on Tata Investment because company has set a record date as 14th of October for the share split in the ratio of 1:10. So definitely keeping all these stocks on our radar today.
Okay, Gaurav, thank you so much for that. We'll keep an eye out on those listed stocks. But let's go across to Sudarshan, who's here to tell us what are we watching out for in the world of F&O. Good morning, Sudarshan.
Good morning, Vamakshi. So today it's a weekly expiry day, and till last week we were talking about that market Nifty has gained around 700 to 800 points, and now we were approaching record high. But the headlines over the weekend, especially issued related to H-1B visa fee hike, that just impacted the sentiment. And yesterday we saw big selling in IT names, and even pharma names were down, and that led to sharp fall in all the mid-cap IT names. Even large-cap IT names were down somewhere in the range of 2 to 3%. Also, Nifty failed to hold levels around 25,300. At the end, just it closed around 25,200. So select names continue to see profit booking, especially auto names after a recent uptick that we have seen on the back of GST cut. Call writing, we are seeing aggressive call writing at the levels around 25,300, 25,400, even at the levels of 25,200. And as I told you, IT has turned weak. One sector that is trying to hold the ground is the financials. And if Nifty or Nifty Bank has to move higher, banks have to hold the ground. As far as GIFT Nifty is concerned for today, it's indicating a start in the near the flat line. So flows front, FIs have sold yesterday more than rupees 2,900 crore, while DIs have bought more than rupees 2,500 crore. In the futures, though, FIs have bought nearly 500 crore, and their long position is around 13%, and they have added long positions of around 600 contracts and reduced short positions by around 1,900 contracts. If you look at the options data, very interesting options data. On the put side, premium has increased sharply with a sharp downtick in open interest for 25,300. But if you look at 25,200, there is sharp uptick in open interest, and there also premium has increased to 38 from 21. In the contrary, on the call side, both 25,300 and 25,200 has seen a sharp fall in the premium. So it tells you there was a huge call writing at all the levels. So now support for Nifty has moved lower to around 24,900, and resistance is now yesterday's high of 25,300 as far as Nifty is concerned. For Nifty Bank, support to be 54,900 and resistance is 55,460. Stocks in the bank band. Two stocks have remained in the bank. Those are HFCL Samant Capital, RBL Bank has entered in the band, and Angel One has come out of the band. Apart from these, keep an eye on KFIN. It had seen fresh shorts yesterday on the reports of General Atlantic selling stake around 10 to 15%. But yesterday in the evening, we have seen the clarification from the company that they are not aware of that news. Muthoot Finance, gold continues to see record high. Yesterday also it hit the level of around 3754. So we'll have to track Muthoot Finance because it continues to see fresh longs.
Okay, Sudarshan, thank you so much for that, and good morning. Vinny this side. You've forgotten your morning and not yet started soon, but thank you so much for the update.
I'm so sorry.
No, just joking. But that's the update coming in the world of F&O. Keep an eye out on that. But with that, we're going to slip into a very short break. Don't go anywhere. More updates on the other side. Welcome back to Power Breakfast on CNBC TV 18. Now let's move on to the big newsmaker, and this is an exclusive. The United States should be India's best friend, says one of the world's most powerful bankers, Jamie Dimon. The chairman and CEO of JP Morgan is in Mumbai for the bank's annual conference. Speaking to Prashant Nair, Dimon said that he is optimistic of a resolution between India and the United States. He also said that the recent hike in H-1B visa fee caught everyone off guard, and listen in to what more he had to say.
And the president and your prime minister clearly like each other, so which I think is good. I don't know what derailed it. I do think the Ukraine, Russian oil has been part of it, so I would take the president at his word on that. I'm still optimistic. In fact, I think as Scott Bessent or the president recently said, no, we're going to get something done with India, and I hope we do. I think it'd be very important.
How will this work out? Because, I think the Indian side has been very clear. I'm not asking you exactly what happens, but there has to be an off-ramp, right?
Yeah.
To knock those 25% off and then maybe work down the remaining 25% as well.
I'm not involved in negotiations. I don't know.
Yeah.
I do think they want to do something on the American side, and I think they want to do something on the Indian side.
Yeah.
And so I'm hoping that they resolve it intelligently. I think it'd be good for both parties.
Yeah.
And I think, India is a great friend of America.
Yeah.
It should be. I know it's non-aligned, and it should stay non-aligned, but with their non-alignment, we should be their best friend.
An interesting chat there, but do not forget to watch excerpts of this exclusive conversation all day today on CNBC TV 18. Let's move on. And India's chief economic advisor, V. Anantha Nageshwaran, has said he expects GDP growth to be near 7% this year, and this is after the GST cuts. Speaking to Shireen Bhan on the sidelines of the Network 18 Reforms Reloaded Summit, he said he expects revenue growth to remain on track and is confident of achieving 4.4% fiscal deficit target. Listen in.
Fiscal second quarter growth numbers are looking quite promising based on the high frequency indicators we track. But of course, that is still only about 1.5 to 2 months of data. So we have to wait and see how did September fare, etc. But we're sort of quietly hopeful that the second quarter has maintained the momentum that we saw in the first quarter.
And so closer to the 7% mark is what you're hoping for,
but
on the back of what the information you have.
I'm hoping for, rather than saying I'm predicting it. I'm not predicting it.
Fair point.
I'm simply saying, based on the trends I have seen, it's the number that I hope for. Yeah. We are confident that the final number will be 4.4% of GDP, which is the gross fiscal deficit. We have had good non-tax revenue growth, and overall revenue growth is on track in comparison to last year's numbers. And we feel that the festival season will last all the way until the end of the year because of successive, the Diwali festival spilling over towards Christmas and New Year, etc. So we are confident that the fiscal math will hold up very well for the current financial year.
And some more from our Reforms Reloaded event. Defence Secretary Rajesh Kumar Singh has told Network 18 that the government will soon invite proposals for medium-altitude, long-endurance drone contracts worth 30,000 crore rupees. He said that the government is looking to double down on indigenization and will spend at least 75% of the defence capex within India.
If you're looking at it in value terms, I think you can expect in capex terms somewhere between 25 to 30 billion dollars minimum per year over the next decade, maybe a little more, I would say, rather than less. Our current plans are that at least 75% of our capex will be spent within the country. That's our normative target. Last year, we actually did 88% of our capex within the country. Last year, for the first time, we exhausted our budget. I think it is challenging to spend money in the Indian context, given the very elongated fail-safe type of procedures that we follow in terms of collegiate decision-making, approvals at the highest level, involving a lot of interministerial consultations. Last year we did it, and I'm sure this year also we'll do it. It really depends on how many contracts you end up signing. And last year we did a record number. This year we've already hit 3/4 of that, 1,50,000 crores worth of contracts we've already signed, or are in the process of signing if you include the LCA program. So we are confident we can do at least 2 lakh plus crores this year.
Now let's move on. An industry body, NASSCOM, has said that the impact of H-1B visa fee hike has been softer than feared. In what was their first response on the issue, NASSCOM President Rajesh told CNBC TV 18 that Indian IT companies have reduced dependence on H-1B visa by over 30% in the last few years. Listen in.
Over the years, I think most of the IT companies, IT services company, IT tech companies have reduced the dependency on H-1B over a period of time. So that, which means that today we are looking at a much smaller issue compared to what we would have probably looked at maybe 4 years ago or 5 years ago. Good news is that this comes into effect only from the next year, which is 2026, new set of visas. So there's a little bit of a breather for companies to sort of enhance the skilling options that we have. From the last lottery, if you go back and look at from the Indian origin companies, because there are also companies which might have headquartered elsewhere, but clearly Indian origin in many ways. So those were the companies had roughly about 15,000 or so, which was issued in 2025. This was much lower compared to what it used to be. So we came down 30% over the last 5-6 years in terms of the number of H-1Bs, applied by these organizations.
Let's move on. And former CEO of Niti Aayog, Amitabh Kant, has said that the US President Donald Trump's imposition of $100,000 on new applicants will have severe implications on US companies. Speaking to Shireen Ban, Kant added that India will benefit from Trump's announcements. Listen in.
So if they had put that $100,000 per year, then it would have had huge implications. But now that they've clearly announced, backtracked and said that it's only in the initial period and not for students studying in the United States, I think my analysis is that this will, over a period of 6 years, it'll work out to a very marginal component, which will then get passed on to the consumer. But it opens up the opportunity for a lot of American companies, because there's lack of predictability and consistency of policies. It gives you an opportunity to open many more GCCs, and it also lead to a much more level of outsourcing for these companies, because simply there is no talent available, and you need talent to be able to do this. So India should be a beneficiary of this. My view is that India will benefit out of this.
Okay, a lot of updates coming in there, but on that note, we're actually going to slip into a very short break. Don't go anywhere. After the break, we'll get you the cues in the world of commodities. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now let's get the update coming in from Wall Street, because Wall Street ended higher with S&P 500 hitting a fresh record high on Monday. Let's go across to CNBC's Bertha Coombs, who's here to give us that update.
The S&P 500 hit another all-time high on Monday, led higher after Nvidia announced a $100 billion investment in OpenAI. The Dow advancing 66, the S&P 500 up 29, and the tech-heavy Nasdaq climbing 158 points. Nvidia will invest $100 billion in OpenAI as the artificial intelligence company plans to build out AI data centers featuring Nvidia's AI processors. Speaking with CNBC earlier, Nvidia Jensen Huang called the partnership, quote, monumental in size, as the link between his company and OpenAI continues to grow. The company said that the new project will need 10 gigawatts of power. That's roughly the equivalent to the power consumed by 8 million American homes. And Oracle is making some leadership changes. The company named Clay Maguric and Mike Sicilia as co-CEOs today, while current CEO Safra Katz will become the executive vice chair of the board of directors. Both of the new CEOs come from the technical side of the company. Maguric was the president of the company's cloud infrastructure unit, while Cecilia headed the company's applications for vertical businesses, including banking and retail. That's what's happening here in the U.S. Back over to you in Mumbai.
Thank you so much for that. Now, with the US market hitting another record high, CNBC spoke to a whole host of experts on whether the Fed rate cut provides a tailwind and if we can see any more cuts. Listen in.
We've been positive on the market, so I think the variables that were driving performance for us were, earnings breadth, which is continuing to look good. Yeah. Operating leverage looks good. Mm-hmm. We're in a situation where comparables are starting to look good. The dollar's weaker, which actually helps U.S. earnings. Inflation is still high, which conversely actually helps earnings. So before the Fed actually met, we were actually positive on the market and kind of leaning into our bull case. I think what we're also seeing is that capital markets activity that we've been waiting for. You saw IPOs, 150 IPOs. We're still protecting about 200 for the year. You're also seeing M&A activity pick up almost 40%. So the market's pretty good positioning-wise right now. I think with the Fed stepping in, that really kind of provides a little bit of a tailwind with regards to kind of moving forward. Our concern is maybe you've moved a little bit too fast off of all of this good news. I think we're still not expecting kind of a 20% rate of return over the next 12 months. We're probably looking at a more reasonable about 10% rate of return.
The Fed did last week in lowering rates another 25 basis points, and we expect further cuts over the balance of this year. Policy rates are going to remain much more elevated than they have been over the last 15 years. And then I think longer out the curve, as you made the point about extending duration, we're in a world in which the demand for risk-free assets has shifted away from central banks and foreign investors and U.S. banks towards more price-sensitive investors like asset managers and hedge funds. And I think it leaves scope for long-term yields to remain more elevated as well. So that probably does mean that you're likely to be able to capture better returns in fixed income than we have been for most of the post-GFC period. I think that's about right. The Fed has really prioritized its labor market mandate over its inflation mandate. And I think if we sat here at the beginning of the year expecting the Fed to be lowering rates into what is likely to be 3% core inflation later this week, I think it would have been hard to consider. But given the way the pace of private payroll growth has slowed, that the unemployment rate's been ticking up once again, I think the market's reaction indicates that this is likely to result in better growth and higher inflation outturns in the future.
Okay, now let's focus and talk about commodities because that's not losing shine, right? Gold and silver continue to go above those record high levels every day. Manisha, good morning. And again, we're seeing record highs for gold.
Oh, well, absolutely. If you look at the early morning in Asia right now, we are hitting newer highs even at this point in time. So this is happening in Asian markets, and you can just imagine what will happen during the day because it is buying. And even at these levels, there is a premium. People want to buy, and they are holding buy calls which are yet to be executed. Every time we look at small profit taking or small pullback into the market, there are people already waiting on the sidelines to accumulate more gold. So this is what this latest rally seems to be coming in from, because the fundamentals have not changed. Yes, it is still about geopolitics, interest rate cuts from the U.S. Fed going forward. There is this concern about tariff impact on the economy, which perhaps could slow down going forward. So there's nothing overnight that has changed, but we have $50 of a jump up in the overnight markets when it comes to gold. Silver not too far behind. We're looking at a new 14-year high this time down at $44 an ounce. Silver is now $3 away from its all-time high of $49.50 an ounce. So we are not too far away from those kind of levels as well. This has been a huge surge in the Indian markets where we are looking at gold and silver both trading at an all-time high, and that is how the markets are expected to open today as well. Quickly on base metal prices, because we're looking at some strength here too. The slight decline in US dollar index has been supportive. For copper especially, the Chinese demand is showing resilience, and there are concerns now coming in from copper production when it comes to Chile and Codelco mines, and that has been supportive for that base metals as well. So mostly precious metals, base metals doing very well.
Okay, Manisha, thank you so much for the latest update coming in the world of commodity. But let's focus on India's External Affairs Minister S. Jaishankar met with the U.S. Secretary of State Marco Rubio on the sidelines of the 80th United Nations General Assembly. This comes days after the U.S. President Donald Trump unveiled a $100,000 fee for new H-1B visas. This also marks their first in-person meeting since Trump administration imposed steep new tariffs on India, including 50% levy tied to Russian oil imports. The two leaders discussed trade, energy, pharmaceuticals, critical minerals, with both sides stressing the need for sustained engagement. Let's move on and talk about those GST rate cuts that have kicked in, right? The Finance Minister Nirmala Sitharaman visited Lakshmi Nagar market in New Delhi and interacted with shopkeepers and consumers to mark the commencement of the new GST regime. Prices of kitchen staples, medicines, electronics, automobiles and others are set to get cheaper. CNBC TV 18 Shilpa Ranipeta brings a report on the impact of new GST rate rationalization on the common man.
Well, the biggest benefit this time from the GST 2.0 is on household expenditure, because most of our daily essentials and food items have now come under the 5% GST, or they're not going to be taxed at all. So I'm here to take a look at how cheaper my cart is going to get. So my ghee, for instance, this is now going to be almost 40 rupees cheaper than before. Whether it's my paneer, that will now have no tax on it, no GST on it. Even my coffee is going to be about 30 rupees cheaper than before. My shampoo also 55 rupees cheaper than before. And I'm also picking up some juice. This juice is going to be 8 rupees cheaper than before. And even my Maggi, this pack will not only be cheaper from about 120 to now 116, but the pack size is also increased to about 600 grams.
जो बजट में पूरा फायदा ही मिलेगा ना, मतलब 18% का 5% होगा तो 12% तो फायदा ही मिले ना, तो उससे पूरा बचत हो सकते है ना।
पहले तो ज्यादा खर्चा होता था, अभी कम हो जाएगा, तो उससे दिवाली में भी फायदा हो जाएगा। आने वाले ये दिवाली दशहरा उसमें भी फायदा हो जाएगा। अभी दिवाली तो अच्छी जाएगी सबकी।
But here's the thing, you might still see a lot of products on the shelves that have older MRPs. This is because the inventory that was made before the GST cuts is still out there in the market, and that will take some time to be cleared out. But here's the thing, GST is applied on the date of supply. So even though the product shows a higher MRP, companies are passing this on through discounts and trade schemes that are available at your kirana stores or even your supermarkets. So while the product might show a higher MRP, at the counter, you will actually pay the lower price, reflecting the cut from the GST reduction. Industry players say that the biggest beneficiaries will be the middle class. Now, say there is a household which has household annual expenditures of about 25,000. They could see benefits of up to 2,500 rupees. And from an FMCG industry point of view, after several quarters of subdued demand due to high inflation, companies are now betting on the GST-led affordability along with the festive push to really lift growth and boost consumption once again. In Mumbai, Shilpa Ranipeta.
That was an interesting report there on the benefits of GST rate rationalization that will come in for the common man. But with that, we're absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in, leaving the Nifty implied open as of now with a very muted start that is indicated for the Indian markets. Thank you so much for tuning in. Up next, Bazaar Morning Call.